Okay. Um, so first things first, the calendar. I have to go through the calendar. This is the last week of June. Um, on the index side of the calendar, there is going to be no news on Monday, 10 o'clock, 10 a.m. I'm sorry, 10 a.m. news on Tuesday. Wednesday, no news. Thursday and Friday, red folder GDP. Pretty light week, but the main focus will be obviously the red folder days, which is Tuesday, Thursday, and Friday. I would say skip Monday. It'll be not high probability for two reasons. One, it's no news. Two, the market is at range equilibrium on the higher time frame, so it'll likely to chop a little bit. On the energy side, same deal. No news on Monday. Tuesday, Wednesday, and Thursday, there's red folder. So the main focus for crude oil or gold, commodities in general, should be Tuesday, Wednesday, and Thursday, the red folder days. So the main focus will be the intra-week price action for commodities. Now, once that once we have that down, let's take a look at what's happening on the charts. So I'm going to start with the 4 hourly because that is the main framework I have at the very moment. Could be hourly or 4 hourly, really the same framework. So here, what I'm looking at is we have the sell side right here because this is the S&T divergence on the higher time frame. So I'm gonna take that right here. So that is the sell side that could potentially get rated. It seems like Nasdaq wants to rate that sell side, honestly, because it broke down the range equilibrium and it's still respecting the range EQ or the premium fair value gap. So here, this is the framework, the dealing range. We are still below the range EQ and it broke down. And there's no sign of any reversal or anything like that. So I'm thinking about Nasdaq going down into 760 and rating that low. So far, that's how it's looking. Now the same deal on ES. Now ES is actually slightly different because it is respecting the range EQ from above. It never broke down. As you can see, the bodies are staying above. It just traded down into the discount portion of the fair value gap here, and we didn't even get a candle close within that fair value gap, so it is still respecting with the bodies. And this is the main premium fair value gap on Nasdaq. As you can see, it's the complete opposite. It's respecting from below. Nobody candle close. There is one actually, 1-2 candle close inside, but it's still IFD'd later on. So I'm leaning towards downside at the moment. This is a very short-term pullback though. But the very least, like a very worst scenario, I think what could happen here is it could form 3 drives down into sell side and then go for the buy side. That's what I'm favoring at the moment. I'm not like bearish or anything. It's just I'm trying to understand this pullback and its potential targets. Now, let me go down to the 1 hourly because it looks better on the hourly in my opinion. Here, I'll take this portion of the hourly fair value gap to narrow things down a little bit, and it is still respecting. So here, the premium fair value gap on the leg itself, it just IFPD'd up there and still respecting. At the lows, I'm looking at the lows. There's no sign of like a deep pullback into deep premium or anything. So as long as it stays like this, I'm looking for sell side delivery almost immediately instead of having to pull back up into the deep premium. And I don't think the fair value gap from Thursday, the premium fair value gap, I don't think shouldn't get violated basically. Now on the highs, looking at the highs, it didn't or it hasn't yet formed any divergence on both sides. There's no bullish SMT, there's no bearish SMT, so it's kind of in the middle, which is why I think everyone needs to avoid Monday session. We are at range EQ, kind of like 50-50 area, known as Monday. It could chop here and form a divergence, and that'll be the clue for us going later in the week. So probably for Tuesday, it'll be more insightful to see what happens during Monday's consolidation. Now, I mean, I would favor a bearish divergence here, honestly, because this is essentially a V-shaped reversal, and in that V-shaped reversal, as you guys know, I favor an SMT divergence within a fair value gap, typically a fair value gap. So here it could actually turtle soup the high. By the looks of it, I'm not sure which one could turtle soup that high, whether that would be ES or NASDAQ, but it's likely to take out that high, then go lower. So here, and if it forms an SMT divergence, that'll be a high probability sell side delivery, and probably lower resistance run as well. Here. So this is my main framework right now, which means I'll be mainly watching the hourly chart as my framework, as my point of interest. And then, obviously, you guys know this already, executions on the 1 minute or lower. But so far, it seems like we're going to have a turtle soup action going on in here. Because it's failing to break below the sell side, failing to break above the buy side also. It did kind of some sort of damage to the downside. And there's unfinished business at the buy side right now. So, let's see. Let me just take this switch. Alright. So again, one more time, I'm going to say it again. I want to see a bearish SMT divergence before having a clear bias. And the invalidation for the bearish divergence or the sell side would be the premium fair value gap. If it gets inverted, it means it's forming a trap on the 4-hourly chart. So that'll invalidate my idea of 760. As long as it doesn't do that, it should be good to go. And this should be the second stage in the market maker sell model. Yeah, I'll also have a short-term dealing range here, from the buy side all the way down to this sell side this time, which is the short-term dealing range. Let me change that to red. Okay. So we could technically see spike up here, and that wouldn't mean the sell side delivery is invalid or anything. It could be still valid, so be careful with that. And on ES, the same dealing range on the short term is right here. So it as you can see, like, I think ES has more potential to turtle soup that high because it's stronger, it's staying above range EQ. So I'm favoring, like, not sure about this, but it looks like ES has more potential to turtle soup that buy side into short-term dealing range EQ. So I'm gonna set alert there. Maybe it will get tagged tonight, I don't know. But this is the main framework, guys. I'm gonna go down on the lower time frames here just yet because it's kind of pointless as it's on the hourly chart. The framework is hourly, so I'm gonna keep it on here. Actually, you know what? let me just quickly go into the 15-minute and try to get a narrative. So yeah, there's nothing much. So there is a bullish S&T here, which could, you know, send the price into buy side. Oh, that's not a bullish divergence, my bad. It's just chop. Market failing, breaking down below sell side. Several times, I tried several times actually. So here's a short-term sell side. Took that sell side, so worked on it a little bit, and stayed within the range on at market close on Friday. That's why I didn't want to go down to the lower time frames right now, at least as of now. All right. Cool. That is that. Also, I just noticed this. It seems like before the dump on Friday, market actually, you know what? Never mind. That's not the right approach. I was thinking about three drives, but then I saw it actually rated sell side before making the three drives. So I mean during the three drives. So it created three highs, but before that it took sell side, so it's not a three drive. So yeah, overall, here's my take. This is for longer term or medium term idea. I think Nasdaq should trade down into either the fair value gap from Wednesday, July 12th, or below, which is the discount, and the south side delivery should be manipulation basically. Then it should form a buy model from there on, something like this. But it should take out that sell side. Narrative is more important here though. If it doesn't diverge here after that V shape, then things will be more complicated. If it does that, then it'll be easier. Low resistance run towards 760. So yeah, let's take a look at DXY. Or actually, let's take a look at crude first, since it's here already. What is it here? Crude looks bullish. Like, I don't even argue with anything. So V shape here as well on the daily. The target should be the trap highs, which is the origin consolidation. It broke out. It's a V-shaped reversal or V-shaped rejection. Now it needs to pull back to form a new low. Basically, in this leg, as you can see, there is no order block or a swing low or anything. So it should form a swing low somewhere. Sorry, come on. Somewhere here, then run the swing low and run for the buy side. It needs to form an SMT here as well, because it's a V-shaped reversal. Now the pullback, where is it going to be? It could be the old daily inverted fair value gap high, because there's a breaker here and order block. So that should be the level for the pullback. So here is the breaker. Not expecting any like major pullback here on crude oil. Something like this. Trade down into the fair value gap, touch wick into the breaker, form a buy model on the lower time frame, and tag the trap fair value gap. The trap. That's not what I wanted to do. All right. Cool. Gold. Gold is staying bullish. I still have the same bias on gold from last week. It looks like gold is in a sell model or in pullback basically, and I would favor if it goes below discount or into range equilibrium. So here. Now this one is going to be conditional because I'm not sure if it's actually going for the sell side or not as of now. So far I'm seeing this as a pullback into range equilibrium, and depends on how it reacts there, maybe below this low here. I'll have more conviction of whether this is a pullback or a reversal. Because the sell side right now, basically, this is the buy side. Let's annotate that. Yeah, the buy side right there. Sell side here. There's bearish S&T divergence that was formed last week within the fair value gap. This is a V shape, the first bearish divergence, so it should keep going lower. Highest probability to draw on liquidity is last week's low, which is the short-term sell side. Probably, so let's put it this way. Low-hanging fruit objective, actually. Let's put it that way. Low-hanging fruit. Right. And then this should be the draw on liquidity range EQ. Let's put it this way. I think it's going to take out the sell side, so I'll put draw on liquidity here. Alright, looks good. So let's annotate this actually. Alright. Take a screenshot of CUDA as well. Before moving on. Moving on to the XY. Alright. The XY is the most interesting chart I've ever seen. Honestly, so it was going for the sell side, went for the range EQ, broke down one more time, but immediately after it actually inverted the daily fair value gap right here and formed a new fair value gap. Breaker block, it's respecting the breaker block, so everything looks bullish on the DXY side, and it should be drawn into the trap highs and overall the buy side here. It looks like this is the second leg of the daily buy model, so this should be drawn liquidity. Need to clean up this chart a little bit. Here, let's delete that, keep that. Okay, looks good. This is now engineered liquidity rejected off of the range equilibrium. Looks pretty bullish. And I think this is why NASDAQ is kind of like, or indices, they're kind of doing whatever they want because, you know, they're not in alignment. They're basically correlating right now. Not inversely, but literally correlating. Euro. The buy side idea was actually violated because it gapped down below range EQ. So we should dump the idea of buy side delivery. Let me actually delete all that because it's violated all the PD arrays. Here. The bullish S&T completed the buy side objective. That's gone. Now the sell side is here. This should be the highest probability draw liquidity. High prob draw. And this is low hanging fruit objective. So the gap, it could actually go up to the gap and fully rebalance that gap, so it could go up there because this asset class, it's forex, right? It's euro, basically like a currency. They don't tend to gap up or gap down. When it does, it's a big event basically. So like you can see here, there is a gap right there, and as you can see, it actually consolidates at those levels and refers back to it several times, like here as you can see, because it's fully rebalancing that gap. So I'm expecting the same kind of thing for the most recent gap, kind of like a chop, maybe like after taking out the high probability draw on liquidity. So like something like this, come here, range bound, then go for the sell side. Could be the idea basically for I'm gonna delete all this because it's not related anymore. For euro, it's pretty bearish. Let's take a look at the GU. Same thing on GU. The buy side draw, it fell short. Maybe it's the CE. It didn't even come up to the CE. It fell short, but OSMT objective completed. Second stage was violated. Let's do this. Let's do that. Let me delete those things, guys. It doesn't look clean when I keep them on. Alright. This is the bullish SMT now. It should be the sell side target, which is the high probability draw right there. The range EQ just broke. It was just broken down on Friday by trading below. So I'm expecting it should react from that level specifically and go for the sell side basically. The high probability draw on liquidity. Something like that. Afterwards, this is the low-hanging fruit. I'm not gonna keep it a low-hanging fruit because that's not technically a low-hanging fruit. I'll just annotate sell side here, and it should be drawn down here at this point, at this time. The forex currencies actually kind of surprised me. Not gonna lie, DXY kind of surprised me. I thought it could. I didn't think it could engineer liquidity down there where it reversed. I thought it could go lower. It didn't, so it changed everything for the forex currencies basically. All right, cool. I'll be sending these charts and uploading the recording in a couple minutes as well. If you guys have questions right now, I'll take it. If not, I'm wrapping up here, guys. All right, no questions. Thank you for joining this session. Let's see if I miss anything. We'll look at stocks anyways. So I'm gonna skip the stocks. CL done, G Gold done, ESNQ done. Alright, cool. Cool. I'll see you guys tomorrow, I guess. Have a great weekend.